Dirk. So I work at Starwood National. Starwood's a specialist investor in real estate, both in equity and debt. We have over $50 billion of assets under management. Around about a third of the things we've done in Europe have been in the hospitality space, and that's both across the equity and debt side of the business. So we're both investing our investors' capital on the equity side in hotel platforms in the UK and Spain and elsewhere in Europe, and we're also lending to other third-party borrowers from our debt vehicles, which are mortgage REITs, effectively.
Okay, great. Can I just check if everyone can hear okay? Yeah. Okay, super. Yeah, Ali.
I'm Ali Imraan. I work for LaSalle Investment Management in the debt investments and special situations side. As you probably know, LaSalle again invests in the equity and in the debt. I work on the debt side, roughly around 60 billion under management. Personally, from my perspective, what we do is we invest or we lend to borrowers either looking to buy portfolios or build up hotels ground up. So on the development side and also on the investment side both. And we've got roughly around sort of 2.5 billion of assets currently that we're investing. And yeah, so hotel is part of what we invest. It's not only a hotel platform, but it's one of the asset classes we invest in. And it's something we've actually been quite active in and done quite a few deals recently in as well.
Okay, great. Kenny.
Hi, I'm Kenny Macinnes. I'm from the Highland Council, a local authority based in Inverness. The Inverness is one of Scotland's fastest growing cities. And I'm kind of, after hearing the sort of introduction from my colleagues here, saying I wanted to talk to these guys about sort of bringing them to come and invest in the fastest growing part of Scotland. We've got a good story to tell, and in fact, sort of part of it's good to see sort of Damien's sort of presentation, and I've got some stats from Colliers about how the inaugural Scottish Hotel Index ranked Inverness first in Scotland for hotel development and acquisition. So I look forward to maybe sort of hearing a bit more about that. I'm actually here sort of on a learning curve as well, because we see a great opportunity. Highlands is booming. There's lots. Tourism is very much a key sector for us. There's also a lot of opportunity in life sciences around Inverness. But I'm wanting to know from you guys, well, what do we do if we're not if we're not doing the promotion right? What do we do to attract more investment into the city? It's a good story to tell, and I look forward to more discussion later.
Okay, good. Dirk.
I'm Dirk Bakker. I'm head of Europe, Middle East, Africa hotels for Colliers. I'm also the CEO in the Netherlands. We have some 70-80 professionals completely specialized in hotels throughout the EMEA region. Strong bases in the UK, in the Netherlands, in the Middle East, and by now also in some other countries like Poland and in Sweden, where we are gearing up. And the services we offer are basically split between advisory services as well as brokerage services, as we very much believe that these two should go hand in hand, and it gives you long-term and short-term opportunities to serve our clients in the best possible way.
Okay, great. Mark.
Hi, I'm Mark Rajbenbach. I'm a real estate partner at Taylor Wessing, a law firm. I'm based in London. As a firm, we've got about 200 people focusing on real estate throughout our network of offices, of which there's 33 jurisdictions, I think, at the last count. My colleagues actually Martin Barwick over there and Alfred Frink, based in Paris and Germany respectively. And yeah, we're looking forward to doing the legals on the investment that these guys made in Inverness.
Okay, good. And if you've got anything about the Paris market, the French market or German market, don't wait to be asked, just simply come in. It's a small enough group here, we'll all be delighted by that. Let's just start with you, Dirk. In terms of the key differences in the market since MIPIM 2017, what have you seen over the last 12 months that you think is an important change?
The most significant change, I think, is there's no more refinancing debt portfolios in the market available. So that means that the amount of transactions have dried up. There's not a lot on the market. That means that whilst at the same time tourism is going up and amount of arrivals are growing, the amount of demand for new rooms in the market is rising as well. So we're getting a bit of tension. So what's going to happen is that the EBITDAs should be going up. So there comes a point in time that trade will come. But in the current situation, there's not a lot of trade going on. And last year it was high season. It was like everything was trading, big portfolios, big assets, lots of assets. Basically, UK. There's only one, the principal Haley portfolios on the market. That's it, nothing else. So interesting times ahead.
Yeah, we now call that the principal portfolio.
Yeah, yeah.
The De Vere portfolio.
Yeah, that's right.
The Haley, it's rebranding.
Yeah, I know.
And I mean, let's pick up with you, Duncan, on because obviously you're looking at hotels as one part of looking across all of the sectors. Same for you, Ali, actually. But, so what's your sense of that? Is there a change in terms of how you're seeing the hotel sector? Are you broadly a buyer or a seller? Has that changed in terms of how you see the market in comparison to the other sectors?
Am I allowed to disagree with Dirk as well?
Absolutely,
yeah. Go.
It's a little bit, I think that within a market there can also be different things going on
at
various points in time. And I think this sort of phase that we're in the market, probably on the debt side when we're lending, is lagging a little bit where the investment market is, maybe because then those refinancings come through, the people get organised to get the capital structure in place after they've acquired the assets sometimes.
Yep.
So we're actually finding that the last half of last quarter of last year and the first quarter of this year has been very active in terms of closing out some of those transactions that were probably in the market at the beginning of the year, and momentum's looking really good. And then in terms of relative value, the good thing about the hospitality market is there's lots of levers, there's lots of interesting things to do as a value add investor, whether that's revenue management or cost management, or completely transforming an asset. In the case of the Russell Hotel, which is part of the Principal Group, we're spending £80 million taking that from a very tired asset from bank ownership to being a first class trophy asset in London. So there's always interesting things to do with hospitality and transforming the assets, and maybe you don't always get to do that as much in some of the other sectors. The key thing is to have the in-house expertise to be able to do it. So when we're buying assets, we're relying on the fact that we have a specialist hotel team, and we have specialists in revenue management, in construction, and all the different aspects of how to implement a hospitality business plan. And when we're lending, we're underwriting other people to make sure that they've got the same attributes to implement those business plans.
Now, if I can add to that, because the question was, what if I see in change from 2017 to 2018? I answered that one, but what you're saying, I totally agree. There's even more going on because you see new brands coming into the market. One of your investments, like Yotel, for instance, is something that was very small a few years ago, and all of a sudden there's a large pipeline, and left, right, front, and center they're signing up. So you've got new product coming into the market because we're seeing a newer client coming into the market with new demands as well. And you, for one, I must agree there, you're doing a lot of stuff on that.
We could go to Kenny now. So we've got one going in Edinburgh. We've got one going in Glasgow now as well. So maybe Inverness is the
next
year.
Well, let's talk about that later. And yeah.
I mean, it's interesting that because that also picks up kind of market trends, and in a way, what's happening with the people who use it. That you're beginning to get a different trend. I know you were at the hotels conference last week. Was there anything that came from that in terms of particular trends that we're seeing with these new brands coming forward?
Absolutely, and I think with the new brand thing is particularly the whole brand question. Don't have enough time to probably address it here. Is actually particularly interesting in terms of the value add. What is the value add of a big brand now? In terms of the franchising machine, paid out of total revenue, rooms revenue, where potentially they're not generating the rooms revenue because of threats from OTAs, etc., etc. So there's a very interesting question there on branding, value of brand, and also the change in occupier demand. There was a time where you were very comfortable with a branded hotel because you knew what it would look like before you even went there, because they had brand standards that everyone identified with. Now people can see what these hotels look like on the internet. They're after potentially different things, some more experiential. So that, I think, the occupier end user trend and sort of the brand question is particularly interesting. I think the brands are responding. So you have, for example, Hilton have a Curio brand which is sort of softer. So you get the benefits of the system without the hard brand standards. You don't have to have this cookie or that oven, etc., etc. So the brands are responding. The bigger brands are responding to that, but of course there's a prevalence of other market entrants in that space, giving more experiential, customer-driven products. I think that's absolutely right to be identified as a trend, which I think will be particularly interesting this year and in the future.
And Ali, just picking up on that, in terms of some of these, I mean, so for example, if I'm in Amsterdam, as I often have to be for work, I'm often staying in Citizen M or the Cubic or something, which has a similar star rating, but actually the size of the room is much smaller and it's a much more standardised format. Do you think that's a route forward, that in terms of redevelopment, that actually room sizes will simply get smaller, that's a way of fitting in more rooms and making higher margins?
I guess it really depends a little bit on like what you're trying to deliver as well, right? Because I think what we've seen a lot of from the stuff we're lending on is a lot of sort of lifestyle-driven hotels, and some of them have had sort of slightly smaller rooms. But I think there's a lot more focus on the experience that they're getting, and a lot more focus on like the actual, like the F&B offer and like the whole package as well. So I can't, like, from the stuff that we've been looking at, the stuff we're actually looking at from a development perspective, I think the room sizes and like the way the rooms set out generally tend to be driven by the actual constraints of the site and like how the architects get into it. I think a lot more people tend to focus on the actual experience of it rather than the other side. And I think one of the things we haven't underwrite more and more is a lot of the lifestyle hotels we look at. The F&B element is becoming a bigger and bigger part of the actual equity return of the business, and obviously by definition how we look at that business as well. So I think we're having to underwrite that side of it a lot more as well. So I think that's probably like the biggest change I'm seeing in terms of the actual product offering that we sort of see. I don't know if anybody else has a different view or a similar view to that.
Well, there's two opinions, but you're saying, I agree with you, it's all about experience. It's not about building the room sizes smaller and make more money. It doesn't work like that. I mean, you're out of business very quickly if you go down that route. So the experience is indeed what it is, and F&B is becoming a major part, although it has also a suppressing effect on returns.
Yeah.
But it's also, I think, not just having the F&B, but a more social aspect to all the common areas and amenities of the hotel. So, for example, in your hotel, what you're getting is quite a compact room format. It's like meant to be the equivalent of a first-class airline cabin is the feel that you're trying to get out of it. But then the hotel then has a lot more kind of communal type feel to the sociable feel to the amenities that it has.
Sure.
So if you didn't have that in a conjunction with the small rooms, then it wouldn't work as well as it does. And then, so that's an example in Edinburgh where we managed to get probably about 40% more rooms into the same building with a hotel format with increased amenities. And that's great in a high occupancy market where you're regularly exceeding 90% occupancy year round in Edinburgh. And then if you go to say resorts that we look at, actually the key count's probably going down in resorts, the room sizes are going up because people are wanting more space for that type of accommodation. So more compact in those compression markets with more amenities, larger on the resort side. This is sort of a contrary example.
Okay, good. Kenny, I wanted to pick up with you. So in terms of the cities, what are they doing at the moment? I guess what's your strategy to try to encourage, first of all, visitors, and then hotels and hotel investors to come into the market, and then we can check and see whether that's right.
Right, okay. Yeah. Well, I suppose, we've always got a good, certainly in the Highlands and in Inverness, we've always had a good brand, but over time, as we promote the area, there's various sort of initiatives we've been carried out. So maybe people have heard of the North Coast 500, which is a very successful branding operation, starting and finishing in Inverness, where people can drive the 500 mile round the north of Scotland. One of the problems is, of course, that in the first year of its branding, it's been 29,000 new visitors coming into the area. Now that might not sound a huge amount in terms of hotel occupancy, but certainly a lot of it is very sort of wealthy people. Let's put it that way. And there's not a lot of places north of Inverness that's ready to cater for them. So maybe there's some sort of strategy there to think about how we sort of introduce maybe higher quality hotels and more in that leisure market that you're talking about, maybe somewhere in Caithness or something like that. You know, there's a lot of people moving around. People are coming, as I say, Inverness Airport. We creep towards 1 million passengers through it per annum. That was one of these triggers that industry professionals have told me is one of the triggers for investors to sort of, you know, become more interested. The truth is, in Inverness itself, the budget, and I suppose the small hotel market, well, small room market, it's been a sort of a new experience for me over the last couple of years in the Citizen M, the Z Hotel. A colleague was telling me that they were in a Premier Inn hub in Edinburgh, which is very compact and bijou as well. And so that's quite an interesting sort of, and you know, I'm wondering if that would work in Inverness. I'm not sure, but we certainly got a lot of budget. We're trying to sort of move a wee bit more upmarket, I suppose. There's Moxie hotels that have taken up our building in Inverness at the moment. Well, are expecting to in the next few months. They're a Dutch company, the company that's developing is Vervint. I can't remember the exact name.
Part of the IKEA.
Yeah, okay.
But has it always been thus, as it were, that key exciting cities would generate hotel investment sort of naturally follows?
But we've got to but up until now, you know, I'm not from Inverness originally, but I've lived there for quite a long time, and I've seen this development of the city. So we're trying to sort of, you know, the leisure market is pretty buoyant. Maybe we want to try and sort of look at the business market as well, and we've got a new campus. It's called a campus, and a wee bit confusing in that it's not just a university campus. It's a life sciences centre and we're sort of developing that with partners there, and we've got a hotel out in opportunity sort of currently being sort of marketed. So that sort of thing. So maybe the fact is that I'm sort of jumping from leisure to business says that maybe we're right for sort of.
So there's one point you touched on, Ken, was airlift. So, you know, BA started flying to Inverness, I guess, probably 18 months or so ago.
Yeah.
And they've added another flight, and so that makes a big difference about, you know, the options people have to get there.
There's flights to every airport in London, and there's Bristol as well. So we're very well served regionally, and we've got links to Dublin, we've got links to Amsterdam, and you know, so it's a growing market.
And Dirk, in terms of how important is that infrastructure then in terms of flights, or because you're obviously looking at cities across Europe, are there cities that are obviously winning that battle? I mean, you're from Holland as well, and you've obviously got we've got the Holland Metropole here, but you've got very good links between those cities. Does that help drive more people and more room occupancy?
Of course it does. It's to give you a clear example. I was 3 weeks ago. I was in Zagreb, in Croatia, visiting the Adria Hotel Forum there, and I've been visiting that for the last 5-6 years. Colliers been done a lot of work there as well. Look at that. I mean, without the infrastructure, roads and airlift, the tourism industry is not developing. It's all of a sudden, just last year, a couple of years back, it started to accelerate. Needless to say, North Africa and Turkey play a role, but certainly more airlift coming in drives investment, drives more occupancies, for sure.
And Ali, maybe coming to you, in terms of when you're looking to invest debt, or when you're looking to a new project, what are the key things that you're looking at in terms of what do you need in terms of geography or in terms of brand? Do you look at things like livability, you know, softer areas like that about how attractive a city is when you're looking at deciding on an investment?
So I mean, where we are focused, so we focus very much in Western Europe. So like we don't look at the Eastern European markets. In Western Europe, I think what we're seeing is if you look at where the traffic is going, and actually particularly driven by like the Asian traffic as well, it tends to be the gateway cities that are really sort of like having a boom right now. Now that doesn't mean like the other cities are not doing well. Like there's obviously a lot sort of like of the spillover effect as well. But I think if you're looking at, let's say, a lifestyle hotel, or like something which is kind of aspirational and try and sort of break into a certain space, and we've done something in London recently in that space where it's a lifestyle hotel, it's in an interesting new area, and it kind of combined the restaurant offering, which is not quite in that area. And the reason why we got comfortable with that is obviously London itself it has seen visitor numbers go up, obviously helped by the pound as well. So that traffic is one of the key things that we look at, what is the traffic doing. And I think we looked at things in Amsterdam again, obviously the moratorium has helped as well, but obviously again another gateway city which obviously has very high traffic going through. In terms of the regional market, I mean, we have more experience in the UK, and I think what we're seeing is the cities that actually invest in their infrastructure and invest in their sort of cities is where you really see that difference. So I think, I mean, everybody talks about Manchester, but it's a very good example of how the city has invested itself in sort of the business side and in the resi side, and that's actually driving the number of visitors. And if you look at every single metric, it sort of it sort of points towards more visitor numbers, most night stays, more business travelers, ADRs are keeping up as well. And if you look what they're doing at the airport, again, going back to Duncan's point as well, I mean, they're investing massively in the infrastructure. They're putting the hotel rooms near the airport as well. So I think that I think for us it's about looking at what the overall infrastructure is doing, what is the traffic doing, and then at a very micro level, obviously, yes, we are also looking at the sites and who the operator is and how you're underwriting it. But I think any sensible investor is looking at those things. And a more macro trend, I think we're looking at the kind of macro trends and making sure we pick those up basically.
Okay, good. And Duncan, just in terms of the cities that you're looking at, I'm guessing you're also looking at demographics, but what's happening with the economy, whether it's a strong economy driving business. In terms of finding product, how easy is that? Are you finding it more competitive with the other sectors, for example, because a lot of it is urban and therefore you're potentially competing with office, with residential now, and also potentially with urban logistics at some point. So how difficult is that? And also, does that suggest particular cities to you that you're more keen to look at?
Yeah, I think we've had a lot of success in the UK, and we've done quite a bit in the Spanish market, invested in Germany. We continue to look into the other markets around Europe with a focus on things like infrastructure and airlift. If you think about the slides earlier on with the rising Chinese middle class, and you think about when the airlift comes and brings those people, there are only so many Romes, there are only so many Parises, there's only one London, right? So these cities are going to benefit massively from that international tourism drive. So there is an increased demand coming from that. Kind of one of the points earlier on was about hospitality and GDP growth. Of course, these things are massively correlated, but you also have this huge systemic demand that's going to be coming for tourism-based cities. And you can't build another Venice. There's not going to be another Vienna, right? So there's these areas are going to, and then even in Croatia, if you think about those markets, they're already kind of saturated. They don't have any more capacity to take people. Yep. So this has got to be good for those markets. I think in terms of finding product, obviously different investors are thinking in different ways. So some people want only branded management agreements, some people want leases. And what we're trying to do is we're generally looking for where's there an angle to add some value through whatever the mechanism is. It could be taking a brand and substituting it for a better brand and negotiating in a new franchise agreement, or it could be taking something, putting our own brand on it. It could be completely transforming it in terms of the CapEx program. So in respect of this, again, it's about having a team that's dedicated to the hospitality side and who are in touch with the market continuously and unearthing those opportunities all the time. And theoretically, there should be stuff to do in any market if you're digging up those value-add opportunities.
Okay,
I was just going to say that one of the things, like, you know, just following on from that, I think one of the things that we also look at is, I mean, if you take, as you say, like the big markets of London, Paris, there's obviously the driver for the Asian tourists to come is already there. So I think if you're looking at sort of the next tier down of cities, like, you know, one of the things that I think personally from our perspective I always look at is, like, you know, why would a Chinese visitor want to go there? Like, you know, what's actually driving them there? Like, you know, can you give them the experiences they want? And again, the word experiences keeps coming up, because I think, like, you know, is it about shopping? Is it about, like, you know, the food? What is it driving them there? And I think that is a lead indicator of, like, you know, when they've done the Venices and the Parises and the Londons and the Viennas and the Romes, like, you know, what else is on the itinerary? And it really, I think, is really driven by that. So I think that experiential side and actually, like, that hook of why they're going there is, again, something else we're seeing. I mean, and I think given that that's been one of the biggest drivers for us, that's been one of the kind of key indicators of, like, you know, where would we go and where would, and I guess from a brand perspective, like, what brand would fit in and what would actually drive the ADR. From that perspective, I think that's a key driver as well.
I did hear a frightening statistic actually, I'm not sure whether it was at IHIF or an earlier conference. There's something like 40%. It's 40% of Chinese people either had never been out of China or didn't even yet have a passport. It was something huge, some sort of mind-blowing statistic like that, which just really underpins how important that will be, I think, in the next.
I think a lot of them want to come and see the Loch Ness Monster, believe it or not. You know? Yeah, it's quite incredible, yeah.
Well,
and it's maybe something that we should be promoting a bit
back.
more, eh?
Well, there's also
exactly every April.
but also the nature of travel in China is changing.
Yes.
There's a city in the Netherlands. It's called Roermond. There's hardly anybody here that would have heard of Roermond. But close to there you go, you heard it. But next to Roermond there's an outlet center, and people are building hotels all around because the Chinese want to go there. So the travel agents, the tour operators, are sending these people there. And it's the same thing in the north. There you have Little Venice, they call it, Giethoorn. Everybody heard of it? Little village, and it's overblown with Chinese tourism. People have even Chinese signs on the doors and everything. And it's a typical way of tourism that will remain for a while, in my view. But at some point, you know, when the Chinese really start being FITs, and it's already happening, obviously, then you have a different mechanism all in all.
And that also in the UK, obviously, you've got, I think it's something like 85 or even 90% of Chinese visitors get on the train to go to the Outlook Centre, you know, and visit that. So I think there is clearly that's a trend.
Yeah.
I wanted to pick up a little bit on the experience side of it. I mean, F&B, food and beverage becoming a more important part of it, also similar to retail in a way. And is the whole of the real estate area beginning to have to treat everybody as a guest, do you think? Is that a trend that we'll see? And it's just in terms of how you think about what people are looking for, Dirk?
For sure. I'm a firm believer in it. I think look at the shared office spaces. I mean, the WeWorks, the spaces, you know, you see retail, restaurants, lodging. It's all in one, and you see that more and more and more coming up in every part of the world. And that is just because the demand from the consumer is as such. And it is also, private equity is also driving that value add. So you start adding value to certain buildings. When there's no product available, you start accelerating that process as well. So anywhere you look, you see that kind of blending coming in. The other thing is, what you also see is what the consumer wants. I mean, 10 years ago, when we were sitting in an office, we had our own servers, we had our own coffee machines, we had everything ourselves. You had to buy it or lease it or whatever you did. Nowadays, you say, look, you know, give me an office. All you want me to do, I want to have the great experience to work there. I don't want to worry about my food, my coffee. It just has to be the best. Yeah. You know, servers, that's all in the cloud. You don't want it in your office anymore. You don't want to invest in that. So that change is clearly happening, for sure.
Okay, good. And just looking at the sort of investors, I mean, Mark, are you seeing a change around in the types of capital that's looking? I mean, obviously there was a lot of private equity money came in. Yeah. Then you've got more core buyers coming into the market. What are you seeing? Are you seeing new buyers as well, whether that's Asian capital or different types of capital, local capital versus international capital? I
think actually one interesting trend I think we are seeing, and I think you actually you want to input on this as well, because I think we're seeing quite a lot of private capital as opposed to private equity capital sort of high net worth family offices type of capital coming into the market, more than potentially I think we've seen, certainly from our perspective in the last few years. I think it's interesting a point Duncan makes, that the big difference is, do they actually really understand hotel? They really understand hotels
low
like
interest
those
rates.
guys do, or that's right. So I think that is a key, in addition to sort of institutional money, private equity money, opportunity fund money. We are seeing quite a lot of private capital.
And you get some very savvy private investors.
Yes, absolutely.
Oh yeah.
And if you think about sometimes the focus they'll put onto the asset, and they'll think in a different way.
Completely different way. You're right.
And for example, in the De Vere portfolio where we're selling at the moment, some of the earlier individual sales we made out of the portfolio were exactly to someone who had a specific vision about how they would transform that hotel from being part of our group into something special that they could envisage. So there's horses for courses for sure.
Yeah, absolutely. And then potentially looking longer term, as you say, they have a different outlook, which brings something I think different to the.
I was just about to say, I think on the Dilpin side, what we find is like a lot of the projects that we actually look at are generally backed by family offices, and I think for two reasons. One is I think a lot of times they have a vision of what they actually want to do, and they kind of want to see it through, and then they obviously get the right help and the right developers and the right people to kind of help them around. And then the second thing is I think it's also the actual life cycle of the hotel, right? So if you're actually putting up a luxury kind of hotel or a sort of lifestyle hotel, it might take you 2, 3 years, 4 years to kind of really get to the ADRs that you think you're going to achieve, right? Because it might take a bit of time to get that branding in or that slotting in your place. And I think from a typical private equity perspective, maybe there are better uses for their capital where the value add on taking something that's already there and adding value might be sort of more fit in with a sort of a 5-year business plan versus somebody who might go, actually, I'm happy to develop this for 2 to 3 years. I'm happy to hold it for another 4 or 5 years, and then I'll take my time to sort of decide what to do with it, and that might fit better with that private capital as well. And I think, and the other trend we also see is from a lifestyle hotel perspective, there are a lot of new brands that are coming through. Either brands which are being sort of bought or created by the big hotel brands, but there are also a lot of brands being created. Virgin is a good example. There's Nobu that's being rolled out as well. There's a few of these brands coming through, and you kind of need that curation to make it work. And sometimes the private capital is potentially better suited to that curation and to see that vision and kind of roll it out as well. So that's something that we see on the hotels that we're financing from our side as well.
Okay. In terms of where we see the market, where the opportunities are, who wants to come in on that in terms of the outlook?
I don't mind to giving an answer on that. At the end of the day, tourism and or arrivals are growing by 7.4% compounded annual growth rate at the moment. And the outlook is that will continue. The amount of keys being built is 4.4% compounded annual growth. So that delta of 3% in numbers is getting bigger. At the same time, what we see is a globalization where we have, globalization is the wrong way to put it, we see more concentration in city areas. People attend to, cities are growing. So in certain areas, if you look at Amsterdam 3 years ago was a 6-7% market. Today it's a 5% market going down, and that will continue. And London is the same thing. Paris is the same thing. Was already for a long time. So there's a lot more cities where there's a lot of yield compression, and so I don't see any reason why that the next 2-3 years that should be any different, because we can't build enough rooms. Airbnb is basically the result, in my view, many reasons, but one of the results is of that 3% delta growth. They jumped in a hole by offering lodging, at a very reasonable price, location, and all of the above. So Airbnb now is stabilizing anywhere between 12 and 14% of total in many markets. That's where it will stop, and that's where it will stay. But it's here to stay. It will never go away, in my view. But we still see prices and yields growing. So we've had a bit of a dent, perhaps, in some areas because of Airbnb. Maybe. I'm not even saying that it's the case because I haven't really seen it. And that growth will continue. So I don't see any reason to see that differently.
I think it's the same thing. I think there's 2 points in your thing, right? I mean, you're comparing the cycle. You're sort of saying from a cyclical perspective, you're looking at the other assets and going, okay, where are we and compare the thing. But then also, like, as Dirk was talking about, there's a structural shift going on as well. So I think you probably need to uncouple, like, the structural shift and the cyclical bit, and say, like, actually, like, which bit am I actually, like, believing, which I'm investing in. And I think for different cities it will be different, because, like, the cycle obviously, like, goes through, like, the market as well, but, like, the structural shift is right now focused towards very specific things. So I think my view is, in a way, you probably need to think about, like, which micro market you're in, where you think you are in the structural shift, and, like, how are you going to fare in that, and then overlay the cyclical side of that as well, and then make a decision on that particular investment opportunity. That's how we would do it.
Just I think it's an interesting point made, Michael, about, say, Paris yields, or actually German yields would be pretty similar. Think about Hamburg or Berlin. And I think that yields are really that low because people are expecting rental growth. They have to be thinking that it's going to be worth more in the future, that the ground is worth more effectively in Paris and Berlin or wherever else for the yields to be that low. But if you compare 2.5 with 5 for Amsterdam, it's twice as much cash flow. And I know German banks love to have cash flow, right? Cash flow is king for servicing debt. So it feels like there's an expectation of growth within the hospitality side. There's an expectation of rental growth within some of these markets. But it seems like you shouldn't get twice as much cash flow for hospitality. So I feel like on a relative basis, the hospitality seems to be better value than the 2.5 cap on the prime office. Now, they could both do well, they could both do badly, but it feels like hospitality with twice as much cash flow seems good.
So is your sense then that the hotel side has actually got further to run potentially than the other sectors?
Well, I wonder what it is that stops, cap rates kind of coming down. I think that, on the office side of the market, people will, kind of relate office yields to where government bond yields are and a premium above the government bond yield. Whereas in hospitality, probably what you think of is that there's a floor on where an operating business could have or a peak on the multiple you could have, or a floor in the cap rate, which is out of line with that kind of premium that you're talking about from office to bond rate. So I don't think that hospitality ever compresses as much as the office side does. I think that's probably a mistake on the office side as opposed to a mistake on the hospitality side.
Okay, we've got kind of 5 minutes left, so I'm going to speed up a little bit now. So we're going to be short answers, which is, so let's just start in terms of the sectors, so we can help Kenny by telling him where we think it's going to work. So are we a stronger believer? Let's start with you, Duncan. First of all, a stronger believer in high end budget. What's your sense? Out of those parts of the market, where do you think we're going to see the biggest growth?
Well, I'm going to answer the question in a different way. So,
short answer.
Make sure you have
People warned me about you.
I think one of the considerations around the Highlands and Inverness is if I compare like Glasgow and Edinburgh, really 6 days, 7 days a week markets, whereas and almost year round. Whereas I would expect, if you think about the Highlands and Inverness, it's a more seasonal market. No one's coming in a wet February and
But interestingly, they are.
Oh, right. So it's a
They are. It's often a mystery to me what people are doing. But they're, all year round. We laughed about the Loch Ness Monster, but it's actually true. People flock there. It's mad, It's not there. It's not true. It's not real. I'll be drummed out of Inverness for saying that.
There's a perception of seasonality.
I know. And it's not as busy, but it's still there's sense.
And the second thing is, I think that capital tends to get deployed in well in larger amounts. So larger markets, larger portfolios are going to attract more sources of capital. And so I think, for your market, engaging with the people who have the appropriate size capital, which could be family offices, high net worths, or smaller PE firms, is probably the way forward. So, not answering your question properly, but larger investments tend to be more desirable at the moment, and because people have significant amounts of capital to deploy, so I'd say that one.
Okay, good.
I should say, just in the Inverness market, I understand that there is a local hotel chain, if I can call it that, who actually is investing and is actually seeing developing a couple of other they've got the Kingsmill Hotel in it's a patio hotel, and they've developed that quite significantly. But they're also developing in the city centre and just around the riverside as well. So yeah, but that's maybe somebody who's got an investment in the area as well, and that's sometimes maybe just the cold light of the day on the investment attractiveness to an investor is maybe not quite. So we understand that, and certainly it's not for everyone.
One of the kind of key things we haven't talked about actually. I mean, you're obviously putting money into the market in terms of debt. Michael's obviously lending into those markets. What's your sense, Dirk, just of the availability of finance? Are these guys actually putting the money that's needed into the market? And are there markets that still will simply not get financed at the moment, or investors are out of them? And I'm assuming for the moment that Turkey is out of bounds, but Greece is now back in.
Are these guys putting their money in? Question. I think again, it very much depends on which area where you put your money in. It depends on who you're investing in. I tend to see a lot of money being available across the board, for sure. Certain areas are politically a little bit more unstable, or where there's a bit more immature governments, I would say, where you would be a little bit more hesitant perhaps. But at the end of the day, where tourism is and where demand is and where airlift's going, money will be found in whatever way, shape or form.
And in terms of the types of investors, Mark, that you're seeing, are you seeing capital beginning to ask about Greece, beginning to ask about some of these other areas?
Yes, the short answer is yes, Greece, no Turkey. Which you're probably agreeing with. I think Turkey is still troublesome for all those obvious reasons, but certainly the sort of capital we represent is looking further afield, I suppose, in the hunt for opportunity and yield, in addition to the sort of core markets.
Well, there's a big difference, and to add to that is that the crazy loan-to-values are gone, so they're more reasonable loan-to-values, and I mean, some areas are 50%, others are 60, 65, 70%, and that's where it stops.
Okay, good. Does anybody else want to, to pick up on whether or not Airbnb and things like that are a disruptor or just a new part of the market? What's your sense? Do you see that from an investment side as an issue?
I'd agree with some of the things that Dirk said earlier, but I also have a little anecdote of my own, which is that I'm staying in an apartment here in Cannes, and I turned up at the apartment to get my keys from the lady who was giving me the keys. I'm waiting 45 minutes in the street to get my key. That's useless to me, right? I need to stay somewhere where it's reliable.
Yeah.
And so there will be a place in the market for rented apartments for Airbnb, but it's a different place from from a Marriott or a Hyatt or whatever else.
And also,
well, I was just going to say that it's interesting. Edinburgh's had quite a lot of trouble socially about sort of the boom in the private rental sector for Airbnb.
Look, if you
so it's from a local authority, from a governmental point of view, it's interesting.
Social disruption is a major topic, obviously.
So you would prefer then to have a hotel investment chain than you would Airbnb from a local authority position?
Well, be careful to say definitively, but personally, I would I like sort of to know where I'm going every night.
And you can it may just be Cannes, but I can tell you as well that 2 weeks ago, our 3-person apartment, luxury apartment, very nice, was then cancelled because somebody else had paid more for it. So we are now camping in Nigeria. Not quite.
Just to add actually to Duncan's, I think it's interesting. It brings us back full circle to the sort of experiential. That is no good to anybody. I had a similar experience here today. And I think if you look also at millennials, there's nothing sort of Instagrammable about that.
Yeah.
I'm stuck on the street. There's no the Wi-Fi is not great. It works, but it's not super high speed. So things like service to the park.
A lot of people who care and people who don't care about it.
Yeah.
I was just about to say, I think the big disruptor, I think that would probably touched on a little bit, is if you look at making an analogy, if you look at the F&B industry, which is kind of going through a tough time now, and if you look at what chains do well and survive and what chains don't do well, it's about how Instagrammable you foot it. That word about Instagrammable, how you foot it. I think that's going back to again the experience you get. So I think the big disruptor, I think, is going to be like, you know, the hotel chains and the people who can provide that. It's very specific, very moment-driven experiences. I think that's going to be, from my perspective, going to be the winners. And like, you know, areas, regions, hotel chains, brands, like, you know, that can actually give that moment and provide that Instagrammable feeling or that piece. That's where the big kind of change, this direction is, and that's probably where the disruption, for a right word, is probably gonna be.
Okay, good. We've got about a minute left, so 30 seconds. I'll give you slightly longer than that. 30 seconds each on. You can either pick the outlook, or you can pick where should these good people invest. Where are the opportunities there? I have a feeling you're going to say Inverness, Kenny. I'm not sure.
Well, I'm not going to be prescriptive. I'm representing all the Scottish cities here today. So.
Okay, good. Mark, let's start with you.
If I was going slightly more up the risk curve, maybe somewhere like, I think places like Porto, those are supposed to have sort of big, Portugal is supposed to have big growth sort of trading. Otherwise, probably fall back, maybe France actually as well, from hospitality specifically. Otherwise, I'd probably opt for Spain.
Okay.
Just to cover all the bases.
No caveat on Catalonia with the referendum.
So I think potentially, although I think Barcelona is still, going to be still going to perform well. I think
It's a snapshot.
It's a blip to use your review.
Yeah, I put my money in brands. I put my money in like the hotels of this world, or the miningers of this world, or the generators of this world. New and upcoming concepts, and there's various one of the mama shelters, these kind of things. I put my money in that.
Okay, Kenny, don't disappoint me.
Well, very interesting discussion today. Lots of food for thought, and potential further discussions as well for us. I would say certainly sort of look forward to some discussions on the Inverness and the Highland and all the other cities' opportunities as well. So,
Okay,
thank
good.
you.
Ali.
Where the structural shifts are pointed more towards, so like, you know, where you can get more retail experiences, where you can get more sort of F&B experiences, where you can get more sort of urban congregations experiences. So experience driven, where the structural shift is pointed towards.
Okay, good. Duncan, last but not least.
Lots of opportunity in Europe to institutionalize what is a poorly penetrated market for brands and a poorly penetrated market for institutional ownership. So lots of opportunity to work hard at digging out value, and so we should keep on doing that. And my second choice is Inverness.